A pleasant day to all of you. This is your Professor Dan, and in this lecture video, we are going to discuss the module on additional equity transaction regarding donated capital. Okay? And we are going to discuss in this lecture video the accounting considerations on donated capital, and the lesson is the concept and accounting considerations on donated capital. Let us begin the discussion. So, class, the accounting considerations will be first, we have to determine who is the donor. Is the donor a shareholder? And we have already learned that shareholder is one of the owners of the company. Okay? And the donor can be not a shareholder. And if it is not a shareholder, it can be the government, a philanthropist, and other entities. Okay? So let us discuss if the donor is a shareholder. So we have to determine what is being donated. Is it an assets, which could be cash or any other form of assets, uh, in any other form of properties, okay? Or since he is a shareholder, he or she can donate the shares of the company because he is an owner, so he has shares, so he can donate his shares, okay, to the company. So we have to determine what is being donated. Is it an asset or shares of the company? So the accounting considerations is this. Donations from shareholders is recorded as debit to asset and credit to donated capital. Donated capital is presented as addition to equity. So we are going to debit the corresponding asset and credit to donated capital. So the account that we are going to use is donated capital. And class, take note, donated capital is presented as addition to equity, which means it will be reflected in the equity section of the balance sheet. Okay? So class, if shareholder donated an asset, for example, in this situation, land, okay, so our entry will be debit land, 1 million, and credit donated capital, 1 million. A land, of course, should be based on the fair market value, okay? So class, the second one is this: if shareholder donated 1,000 ordinary shares, so meaning the shareholder is holding more than 1,000 or more ordinary shares, and he donated 1,000 shares, okay, to the company, the own shares of the company, okay? So in this situation, there are two important dates that we have to consider. The first one is the date of donation. So let us assume that the date of the donation is August 1st, 2021. So on August 1st, we are going to prepare just a memorandum entry. A memorandum entry that would give us an information that on August 1st, 2021, the corporation received donation of 1,000 ordinary shares from Mr. X. Okay? Take note, there is no journal entry. Okay? We will only prepare a memorandum entry. And the second date is the date of selling the donation. Assuming that the date of selling the donation is on September 29, 2021, okay, we will prepare this entry. Class, take note of these 1,000 ordinary shares, you can reissue it to other shareholders, to the public, whoever wants to buy that 1,000 shares. Okay? So if in this case, you sold the 1,000 donated shares at 800 pesos. This is the time that you are going to make this entry. You have to debit the cash that you received in selling the ordinary shares of 1,000, okay, which is in this case 800,000, and then credit donated capital, okay? Okay, class, that's how we are going to account donated capital if the donor is a shareholder. Now let us go to the accounting considerations if the donor is not a shareholder. So the uh, first thing, again, we have to determine what is being donated. So if the donor is not a shareholder, the only thing that he can donate is assets, okay? Cash and properties. Because he is not a shareholder, so he doesn't have shares of the company, okay? So the accounting considerations is that donation from someone who is not a shareholder is recorded as debit to asset and credit to donated income. Donated income is presented under the income statement, okay, class? So the difference is that if it is a shareholder, the credit is donated capital. If it is not a shareholder, the credit is donated income. So in this case, like if this not a shareholder donated land, okay? Again, it should be based on fair market value. And then we will debit land and credit donated income. And this donated income will be presented in the income statement, while donated capital is presented under the equity section of the balance sheet. Okay? Okay, class, let us move on. So let us have an illustration. On September 29, the ABC Corporation received a new service van from its major shareholder as gift on the corporation's anniversary. The van has a cash price of 900,000. So first, let us determine who is the donor. The donor is a shareholder, okay? Here it indicates from its major shareholder, okay? And what was donated is a van. So here, our entry on September 29, we will debit the asset that was donated, which is a vehicle worth 900,000 and credit donated capital, okay? Situation number two, on September 29, the ABC Corporation received 9,000 ordinary shares of 100 par value from its major shareholder as gift on the corporation's anniversary. So class, in this, we have to determine who is the donor, and we have it here, shareholder, and what is being donated, 9,000 ordinary shares of the company. So here we have to determine two dates. First, the date of donation, which is September 29. What we will have to do is we will prepare a memorandum entry. Okay, so here on September 29, the corporation received 9,000 ordinary shares from shareholder. Okay, next date is, by the way, take note, class, the donation on September 29 will not affect the assets, liabilities, and equity. However, the outstanding shares was reduced by 9,000 shares, okay, because it's not being held by the shareholder. It was given to the company already. So what's the importance of this? Is important in case there is a declaration of dividend, because this 9,000 will no longer be entitled to dividend because it is already in the hands of the company, okay? So again, the next date that we have to learn is when is the date that we are going to sell this 9,000 ordinary shares, okay? Suppose that we have sold it, then that's the time we will make the journal entry. And assuming that on December 23, reissued, meaning we sold it, okay, the donated capital of 9,000 shares at 110 per share, okay? So class, here we will debit cash of 990,000, computing 9,000 shares times 110, and crediting donated capital. Plus the par value, okay, has no more importance, okay, in the reissuance or reselling of the shares. It is only important, okay, on the first issue, which should not be, the selling price should not be lower than the par value. Okay, class. However, in this case, we don't have to recognize any share premium because that is a donated capital. Okay? Okay, that's it for now. And if you have questions, please let me know. Have a great day, stay safe, and listen me again on the next lecture video.